Guys, our outlook is ready for the first week in September. What's the crypto space doing? They have been correcting. We shall examine whether the upside will continue. Stock markets, they have also been slightly correcting. And welcome to our September outlook, as obviously now is the time to focus on potential corrections in the market. Traditionally, the month of September, has been rather a bearish one, and that's exactly what we would like to examine. Furthermore, in the next couple of days, we'll sit together with Mirko as well to examine the dividend stock market performance. And for the ones of you who have missed it, just check out our recent interview with the one and only Dr. Doom, Mark Faber from northern Thailand, Chiang Mai, whom I visited. Guys, let's go back to markets and check out what potentially goes. This week is going to be packed, the upcoming week. We start on Tuesday with the manufacturing PMI data, purchasing manager index, expected at lower levels. Well, on a positive note, the market is expected, or the indicator expected, to rise towards the 50 level, which would mean expansion in terms of economic sentiment. However, the negative sentiment currently in regards to tariffs and whatnot is still looming in the background. Yet, what we can see as well moving forward on Friday, the non-farm payroll figure is going to be important to check out where the markets might proceed to. If you're looking at the euro-dollar currency pair, the market has been rising again. Well, this current week caused the markets to retrace slightly lower, but whenever the market tries to weaken, some magic forces kind of step in to push the market to the upside. I am still a firm believer that some strength of the dollar might resurface, and I kept saying this and still do, because important zones need to break first. Well, what's that news? Nothing much, but obviously when the high point will move, or the market will break the 119, 118.90 area, only then a further push to higher levels might be kind of ready to start. At the moment, we see the market in a bit of a sideways pattern, and that's currently what seems to hold the market up from rising. As we can see here, quite often corrections and some sharp price increases, corrections and another potential sharp price increase might be the answer. Yet, looking towards the British pound, we got the same here. The monthly candlestick pattern closed at levels which I still see as quite viable for another contraction in this market. Breaking and pushing the pound maybe to lower levels. The 134 area needs to break in order to unleash downside momentum, right? So we could see maybe these couple of trading days here, maybe such a candlestick pattern will also form, to then see to the downside maybe some further weakness as well, which is what I would believe, where I would say and expect the market to basically weaken, and that's exactly how I see the current candlestick momentum here, as rather negative when it comes to the current market observation here. So now let me move and zoom in here. That's the one I mean. Anything of bearish nature might indicate that the market is going to be ready potentially to weaken further, offering an array of selling pressure in this market. Again, it's just obviously up to the markets to decide what it's going to be doing. However, if we are looking at the positive side, we can see as well, and that's obviously kind of the importance here in markets. If we are focusing on the Australian dollar, the Aussie US dollar currency pair been rising again. And this might indicate that further momentum, further positive momentum might be on the cards, as the market's positivity here, and that's the candlestick I mean here, the market's positive momentum might be reignited, calling for bull market run momentum in the equity market, right? So that's the big question, or that's the big momentum in question. However, and let's draw some lines here. However, the market has been not able to kind of rise above a certain area. And that's exactly how I'm a bit, and why I'm a bit worried of further upside here. The market, no, we can't see anything much here. The market just tells us as well the same story. We have been lagging in terms of upside in the euro, in the pound, in the Aussie. The market keeps trading on the sideways pattern, and that's exactly the indication, to me at least, that there might be an array of selling pressure in the first or second week, maybe in the month of September. Let's move towards the important news events, which are basically due towards the middle part of the week. ADP employment change expected rather on the lower end. We've seen this fairly recently. ADP plus the non-farm payrolls have not too much in common. The data is just being procured differently in a way. But if there's any weaker figure here, this might mean that the US dollar might get under pressure as well. And look at this, guys, right? So NFP data, the non-farm payrolls, are expected at 74,000 newly created jobs, which is nothing much in the States. We've seen this here. The figures are somewhat, at least, weakening. We got also something important to basically focus on, by the way, before I forget it. And those are the job openings. Basically, how many positions are on the market, how many positions are available to the audience in the US, how many jobs can be taken up from markets, and they are expected to weaken slightly as well. Those are not big changes, but we can observe that there's a slight trend at the moment. Starting in July, basically, the market was kind of positively behaving here, but it seems that there's some array of slight negativity in the equity market as well, potentially following up with what we've seen here. And that's clearly an indication as well. So focus on the JOLTS job openings as well, as they might give us some further insights in regards to the momentum in the US economy. And then obviously in regards with the ADP data and the non-farm payroll data. By the way, average hourly earnings a bit out of focus at times, but they also tell a clear story here. If hourly earnings rise, that's a positive sign, obviously, for the workforce in the United States. What else is up and running this week? We talked about the PMI data, ISM manufacturing PMI. We got the services data on Thursday as well. As traditionally here, service sector is slightly better in this case. We have been kind of hovering around the figures. I wouldn't pay too much attention into the exact and certain figure we will get here this coming week. I would more focus on the overall big picture, and that's exactly how and what we should do in terms of the equity sector. As said, the Australian US dollar currency pair is about to weaken slightly, at least. A break above the high here might indicate further momentum to the upside, and obviously kind of might indicate that there could be a push towards higher levels. But if we see what's going on, a breakout here, a clear breakout either to the upside or to the downside is what we will focus on. And guys, for the ones of you, please leave a comment under the video. Don't forget to subscribe to our channel, obviously, to kind of grow the audience and get your questions in terms of any market movers, as we said beforehand. So what else is brewing? Any upside in the Aussie might indicate that equities could rise as well. And the equity sector here, we can see and check out the S&P 500. The S&P found some technical resistance pattern here a couple of times, which is now, should the market weaken, maybe potentially a strong supportive zone, right? Resistance on the left, support on the right is gonna be what could be in focus. That's actually when also and where also the 50 moving average would kick in. And I might say the next couple of trading weeks, we on the weekly chart here might be slightly shaky. We added in the Fibonacci levels here, and what we can observe as well is that the 23.6 Fib retracement, one of the stronger important areas here, might act as a support, which then could drive the market up outside of our screen here to higher levels. Jokes aside, that level, if it's being tested, probably not in the next couple of trading days, but in the next couple of weeks, this area should be in focus. If I were you, I would check it out as some indication here might tell us technical resistance on the left, support on the right, Fibonacci level 23.6. We got the rising 50 moving average. So there's an array of data, technical charting data we could maybe use in order to find the direction. Positively speaking, if the Aussie, as we mentioned, US dollar currency pair, if the Aussie dollar is pushing higher, that might indicate that the market is going to strengthen further. And that might as well be the case, right? The early days in September could also give the market a bit of a push to higher levels. Could be on the cards, and that's exactly what we could use as well. Maybe the market is starting slightly positive during the early days in September and then weakening. Wait a second, what we also have, and that's an important observation, by the way, what the Federal Reserve, namely Jerome Powell, is doing. 17th of September, if I'm not wrong, we got the interest rates decision. And we could also see that the market is just doing the opposite. We could see that maybe the S&P 500 is gonna basically weaken at first to then see some stronger momentum in the latter days, starting off the 17th of September. If Jerome Powell is going to cut interest rates, that would be positive for the risk sentiment, for crypto, for the general economic development, for the equity sector, for the S&P 500, as well as other markets, obviously, in a positive manner. Let's check out the NASDAQ here right now, because the NASDAQ, the technology index, by the way, NVIDIA's strong data, positive data, was and is something about 9%, if I'm not wrong, of the S&P 500, which could push the market to higher levels as well. Again, the NASDAQ kind of showing some corrective pattern. The NASDAQ is lagging slightly behind, yet the market was extremely positive, obviously, in the recent couple of trading weeks, whatever you would like to check out. But there is some slight correctional momentum here in the making. And that's something, if I were you, I would check out positively S&P. If you look for upside, rather buy the S&P. If you're looking maybe for some slight downside, maybe focus on the NASDAQ. By the way, spoiler, I still have my little short positions in the S&P 500. The more the market moves higher, I'm more or less obviously happy with my equity performance. By the way, Alibaba made a nice push on Friday, earlier trading on Friday. Strong figures. China market still quite bullish, but the S&P 500 I still like at the moment in terms of a correctional momentum. Yet the NASDAQ, as we see, is about to roll over maybe a bit more because of the technical pattern, because of the underlying companies. We see that maybe not quite, but a slight correction, slight profit taking, saturation in the market might rather kind of affect the NASDAQ as well. So I remain in my S&P 500 short, and obviously I won't sell any of the equities which I have in my portfolio. Instead, if we see a market correction, I would rather wait to look for any further buying opportunity at lower levels in medium term. That's for the NASDAQ. For the Germans here, the DAX is also kind of slightly correcting for the ones of you in our trading group on the website. We have sold the market here. We saw the market is about to break the 50 moving average. Still looks good, to be honest, here, as the market might just also do the same to correct towards the 23,200 level, whatever this is here, 23,370, something as a next or initial support, which comes down at this area, is clearly what might be on the horizon. What's up and running and what's next? We should start talking about the crypto space. Bitcoin is seeing a bit of a correction, and we see that the altcoin season might have started. We see the less funds are coming or being moved into the Bitcoin market. More funds are being pushed rather into the altcoin market. Obviously, Ethereum would be a one which we should focus on. But let's start with Bitcoin. As we see, the market might be on the way towards checking out, and the same like what we talked about before in regards to the equity sector. We could see that this area here might be a nice support which pushes the market then back up two higher levels. We talk 104, 105,000, 104,000 something psychological level. We are not far off. We are very close by, and that's something which I would eye here for potential buying opportunities should the market test this zone. Anything of this nature, a bearish candle and a bullish engulfing candle, anything of positive nature, any pin bar candlestick at around this level here, or maybe even lower. We have the 50 moving average, which is also around the corner and still in a rising manner. Any of the zones can be used as buying opportunities. Speaking of buying, the Ethereum market looking kind of quite cool for now. What we can observe here, and that's on the monthly, the market has corrected again. And I said earlier on, I believe that now we are through that zone and may be able to rise further. It seems a bit of a detour is currently needed, the market been correcting, but the positive thing here in Ethereum is clearly the market found a strong resistance here a long time ago. That was 2021. And here on the right side, the market extended this area. So we created recently in August, when was it, 2 weeks ago or something, we created a new all-time high, which is good in itself, that the market is able to kind of continue with a positive motivation, and that's telling us the uptrend still intact. Any correction to lower levels, maybe as low as towards the 3,900 zone, can and should be used for buying opportunities. The same is true, by the way. Currently, XRP is weakening as well. It's in a sideways movement mode here. I would buy above the high only if the market starts rising again. I would be interested to kind of get my hands into that token as well. And speaking about the Solana market, we can see the market is about to break the high point here as well. Potentially it takes a bit of time, and obviously big picture, bottom line, we need upside in the NASDAQ, in US indices in general, in order to celebrate the upside as well in the crypto space. If we don't get any positive momentum here in any crypto, in any index, then the likelihood of a correction, a bigger correction in the crypto space is potentially as well around the corner. In any case, as long as we kind of push higher here, I like the trend here. Solana looking pretty good. Cardano is just a bit of a sleepy giant, maybe correcting further. We are now at exactly the 50 moving average based on the daily chart. That zone might be tricky. I wouldn't be interested kind of to buying anything else. Well, if we look at Dogecoin, just for the ones here who are interested, not really quite a cool market at the moment, maybe to kind of be invested in. What else is up? We have important news and market motivation in regards to the oil market. Oil seems to be ready to weaken further. The longer term trend has been quite bearish. That's what we can observe, right? So based on the long-term charts. On the daily chart, we have tested an exact same story, an exact same area. Support line here in this zone, in this market environment, and now we see the market kind of starting to weaken at this area at a bit of a resistance point. And that's exactly how we can see the market might correct even further. Daily charts, weekly charts point towards a shorter term correction higher. Longer term charts, and that's the monthly chart, tells us the market seems to be ready. I'm not sure if we can see a lot here. Let me open up this as a fresh chart. We can see here that the market was kind of quite closely trading here. Resistance pattern, the market pushing higher, slightly higher, and now weakening again. And that's exactly what why I'm excited to see how the market goes. Any push slightly higher, I would take as a consideration to sell the market again. Speaking of selling pressure, by the way, we have the same also true for silver. Now, you might kind of, correct me in this one. The silver market is still up and running and has been pushing higher. We are still in a quite high environment in terms of price motivation. Is the price kind of trading here in a very nice level, at a very nice level? Yes, but is the market potentially facing some corrective pattern? I might say so as well. First of all, my technical pin bar candlestick here has been overextended, telling us that the bulls are kind of still in control. Yet what we've seen quite often when such a zone happened, this was here the same story. The market pushed to the upside, corrected, and then kind of broke the upside and has kind of even retested the same zone. So I see still chances that the market at least will correct to give me the opportunity to basically get out of the trade. And I still am in my small, but still in my position in selling silver. First of all, it's a contract for difference, CFD, which tells me I'm getting, as long as the interest is slightly higher in the dollar, I'm getting still a couple of bucks out of that. And I will keep and continue to hold this trade here, as well as I believe, of course, if we see a correction in the equity sector, short, medium term, then this could drive the demand in silver back to lower price levels as well, obviously, as silver is a strong industrial metal. Gold prices, last but not least, have been not doing anything bad. Instead, we said breakout is around the corner, and that breakout seemingly has happened. So the weakness of the dollar might be one thing, but we see trading levels have been overextended here. The market pushed higher, corrected. RSI figures have weakened again slightly with a sideways trend. So the upside might continue here. At the moment, we see that the market is just maybe ready to break higher here based on this area. High point here, correction, sideways. It looks like the market is still overextended in the monthly RSI reading, and that has been the case for quite some time. However, in such a strong uptrend, this can happen and can stay, or the market, the RSI reading can stay overextended for quite a period of time. So maybe let's not focus on that too much. Guys, leave your comments under the video. As said, we hope to give you quite some outlook here this week. PMI data, we have quite a few important news events, unemployment claims, obviously, and then the big ones, ADP employment change, plus the non-farm payrolls on Friday. That's exactly what we should focus on. Unemployment data out of Canada following up the same time on Friday. So there's quite a bit of stuff to focus on. Stay tuned. Thanks for tuning in, and see you then. Take care, guys. See you next time. Bye.